Muito obrigada. Thank you, Carrapicho Rangel. We just heard Carrapicho Rangel, songwriter, producer, joining us from Araraquara, em São Paulo. Muito obrigada, Carrapicho.
Okay, thank you.
His latest CD is called Na Estrada da Luz, In the Road to Light. And it's light that we wish to you and much success. Obrigada.
Okay, obrigado.
And welcome to BayBrazil Annual Conference number 9. This year has been very special because last month we celebrated BayBrazil's 10th anniversary. And to celebrate, we are extending our annual conference into a series of online weekly programs. Last week, we discussed the future of real estate, and a couple of weeks ago, we had Brazilian and American investors discussing the innovation economies of US and Brazil. If you missed, these recordings are available at BayBrazil YouTube channel. Check it out. Today, we are shifting here to discuss how technology is transforming finance, how it's transforming the way we bank, the way we save, the way we spend our money. And for that, we invite a group of experts, and I'm very honored and happy to have them joining us. I want to start by introducing Ricardo Guerra. Hello, Ricardo. Ricardo is CIO of Banco Itaú. He's joining us from São Paulo. And I have a very special gratitude to Ricardo because he's been supporting BayBrazil for many years. We've been working with his team. So I'm very happy to have you here, Ricardo. And you joined our conference first edition in 2012 at Stanford University, remember?
Yes, I remember that. My pleasure.
So
Glad to be back.
welcome back.
Thank you.
Welcome back to discuss the evolution of fintech. In this first hour, Ricardo will be joined by two founders that are disrupting the financial markets of Brazil and the US. I'm very pleased to have here with us David Velez, co-founder of Nubank. Hi, David.
Hi, Margarese. How are you? Thank you for the invite.
You're joining us from São Paulo, right, David?
From São Paulo, yes.
Great. Welcome to our conference for the first time. Happy to have you here. And the other founder that is joining us for this first hour discussion is Pedro Franceschi. Hello, Pedro.
Hi, Margarese. How are you? Thanks
Good.
for the invite.
Pedro, are you joining us from Los Angeles, right?
Yes, that's right.
Excellent. And Pedro is co-founder of Brex. In fact, his co-founder, Henrique Dubugras, was going to be here with us today, but he had a conflict, and Pedro is here with us to tell us everything about Brex. So happy to have you. Ricardo is with you. Let's get started. Thank you.
Thank you, Margarese. Thanks, Pedro. Thanks, David, for joining us for this conversation. We'll have in the next 45 minutes here a chat about the financial industry, all the disruptions that we are seeing, and everything that's going on in the market. You can send questions to Margarese. We can answer them in the last few minutes. But I would like to start with the context, which I'm sure is familiar to everyone. The financial industry is not different from the other industries that we are seeing a big shift based on technology. But I would say that technology is just a means to an end, in the sense that the real revolution that we are seeing is based on the customer. People are using technology to leverage the relationship with the customer by building new products, by building digital products, by creating new experiences, and really bringing something that it's less painful, that is more customer-centric, more customer-oriented. By the end of the day, what we are seeing is a world getting better. What we are seeing is that in many different industries, all industries are being pushed to provide better services. And it is not different in the financial services industry. I work for a big bank in Brazil, and I can assure you that we are feeling very pressured to provide better services to the customer. And as an established company, as an incumbent, we have to transform ourselves. We are enduring a shift in everything that we do, pretty much, in methodology, technology, in our mindsets, in the way we build solutions, in the way we see the customer, in order to remain competitive, in order to compete with guys like those brilliant people that are here with me today. So it's a big movement in the market, and we are seeing this vibrant move as we speak in the last few years, and we are going to be seeing this for the next coming years. So having said that, let me ask these guys here, David and Pedro, with this landscape, how do you see the coming years, this market taking shape? We are seeing lots of fintechs in Brazil, in the US, coming to the environment. We have seen this in the last few years. We are seeing the movement from big banks as well, which are trying to do sort of the same offering, but with different challenges. And we also have always people from other industries with the disruptions of value chain that are always trying to offer financial services as well, people from retail or big techs or whatever you can imagine. So how you see, Pedro and David, this industry taking shape in the future, in the coming years?
David, you want to start?
Great. Well, Pedro, you go for it. Go for it.
Yeah, I think that's a very interesting question, because we before building Brex, we built a fintech company in Brazil, Pagar.me, and I think for us, we sort of had this belief that that a lot of what we were seeing in Brazil was sort of unique to the fact that Brazil was way, I guess, underdeveloped when it comes to financial services. And then coming to the US, I think it was pretty clear that that's actually much more of a global trend. And that literally every single like big financial service provider, bank, et cetera, I think either will sort of transition the way they think into sort of how fintechs are thinking, or they will be disrupted. I think sort of if you sort of look at how disruption happens in all sorts of industries, right? I think there is this sort of trend where people start serving the most basic needs and sort of evolving from there. And I think in fintech, that's definitely the case. And you're seeing apps like Robinhood in the US, Nubank in Brazil, and a bunch of others sort of following that same path. And I think that will continue to happen. And you're either going to be in the sort of same mindset and way of sort of approaching fintech or not, because these products and services are becoming more and more integrated into others. And I think just sort of this old, I guess, view that you could just offer banking services sort of disconnected from sort of more broad services, like it's not just about the banking itself. It's about like, how are you giving credit? Are you using data that is different from like traditional credit bureaus, right? Are you offering these services integrated into not only mobile, but also like how sort of this plays out with the rest of everything you do in your life? And I think more and more is banking is becoming sort of a part of people's lives, and not necessarily this standalone company that you just use to sort of get access to a bank account or like a loan and sort of go away, right? So I think I would say the sort of two things that I've seen is definitely a global trend, and especially in the US. I think we were surprised by how much disruption was still to happen, even in the pretty developed market. And second, I think more and more financial services will become integrated into sort of the rest of people's lives. And you see like WhatsApp launching payments, right? You see Facebook doing all these things, and that will continue to be more and more the case.
But how do you see in the future things getting more stable? Or you think who's going to be the winners in this market? You think it's going to be more spreaded? You're going to see the current players just added by new players, or you're going to see some disintermediation? What's your view in the future?
So my view personally is I think there's sort of two sides of this, right? I think one side is you have the players that have like really broad distribution. So if you think of like social networks, Facebook, et cetera, right? They have all the users. And that's a really big part, especially in payments, into getting acceptance and getting usage, right? And I think on the other side, you have the people that are willing to take the regulatory burden to do all this sort of financial products, right? So people willing to get banking licenses to give out loans, people willing to sort of deal with all the compliance and the sort of regulatory constraints at a much deeper level. So I think the way I sort of see it evolving is I think you're going to have a lot of financial services offered by sort of integrated into other products more and more. And I think fintechs and I think the banks that can sort of follow that trend will be like doing this sort of heavy lifting of the regulatory side to sort of offer all these things into like an integrated fashion. But I think these two sides will definitely exist.
Okay, thanks, David. What's your take on that?
Yeah, no. So very similar conclusion, but maybe getting at it from a slightly different angle. I think some of the initial, at least from our perspective, a bit of the initial view or the initial bet in, let's say, 2012, 2013 was financial services and Brazil were going to obey the same laws, almost laws of gravity that were happening across the world in all the industries and all sectors, which were the intersection of two trends. And you mentioned two. One is that focus on the customer and using technology to get there. What was interesting was in the early on, there was a lot of conventional wisdom that both of those, that the those laws of gravity were not going to apply to Brazil financial services. It were going to apply to all industries and all countries, but Brazil was going to be the exception, and financial services, because a number of different reasons, because Brazilians wouldn't trust new brands, because Brazil has phenomenal banks, because of the regulation of the sector, because of a number of arguments that I think the market had built to support that point of view. Fast forward 7 years, I think what you're seeing is precisely that. It is these global trends across all sectors: financial services, consumer, education, transportation, media, following these same laws. It is a focus on the customer, using technology to provide cheaper and better products, right? Technology allows you to do both, allows you to offer better experience at lower cost. So why would you not, if you're a customer, why would you not pick this? You have to tell me what I would not prefer this type of product. So I think as we look forward, and partly of COVID has definitely accelerated that getting there faster. We think it is following that trend, is technology companies dominating a larger part of financial services, as well as other sectors. Technology companies defined in the broader sense, obviously, that use a lot of technology to produce better products, but also have a specific culture that is very differentiated from, let's say, the non-traditional technology companies, more of the traditional incumbents. While the incumbents in all sectors were these hierarchical organizations that were very top-down, you find that these technology companies, in the cultural sense, tend to be much more horizontal, use data to make decisions, are much more agile. So this combination of this culture plus technology in the center have a huge advantage of eventually taking a significant share of both financial services and other sectors. That doesn't mean that there can be a lot of incumbents that restructure themselves into a technology company. And you can see both cases in our industry. Yeah, you see the case of Blockbuster that tried to do that and failed. You see the case of Walmart that's actually doing a pretty amazing job competing with an Amazon. Yeah. So it's not necessarily that the incumbents don't have a shot. I think they have a shot, but they need to go through that transformation to become a technology company in both the substance as well as the spirit. So our view is that those sectors, including financial services, get dominated by that, but those type of companies that look and smell like that. What that means in terms of sort of the big platforms, as Pedro was mentioning, is there are 5 big tech companies, and they do have the distribution and they do have the customers. When you can provide services, any type of service at a zero marginal cost, it's a huge advantage. When you can provide it and sell any service at a customer acquisition close to zero, it's a huge advantage. So they do have a huge advantage in being a channel of significant distribution of anything. But there is a limit. There is a borderline in which I don't think they will cross, and that's when you start getting into really regulated spaces. Yeah. And so that creates very sort of natural relationships of cooperation where some of the more regulated entities in certain areas that are willing to go through the headache of regulation and AML and KYC and a number of different areas do participate with these large platforms.
Perfect, and I agree 100% with your reasoning, David. And I can give you guys the point of view of an established company who's trying to become a technology company, and it's all at the same time a super fun journey and a super hard journey, because you have like things that you do that you're just able to implement things like bringing new technology to different slices of business, like bringing agile culture, understanding more about the customer. At the same time, you have brilliant people that have brought incredible results to the bank that are still trying to understand what this conversation is all about. So when you take a big company like Itaú, I'm giving the example from the company that I work for, which is a successful one for 90 years or something, right? But to remain successful, we have to change the culture, as you said. We have to change the way we think, the way we produce technology. By the end of the day, we have to become a technology company, right? That's what you said, and I agree. but the road to get there is really, I would say, it's really fun and hard at the same time, because it's not one movement that you just like are climbing steps in a stair. It's sort of like your right leg is 5 steps ahead and your left leg is 7 steps behind, and you have to bring it, and you got to make sure that everyone is walking along. So it's a big challenge to do a digital transformation in a big company. But like you said, Walmart did, others are in the same journey. And I think I agree with you guys 100% that probably the winners will be those who can better manage a technology platform to better offer products to the customer. And the starting point doesn't have to be a startup that will grow with a brand new culture and tech platform. I mean, that's one possible way. Another possible way is to take an established company and change it, which is a big transformation, which is not easy to do as well. So I don't think anyone has easy steps to get there, and the problems to be solved are different from different points of view, right? So by the end of the day, we're going to see winners that are what you just described, David, those who really understand the customer and are fast enough to compete with the fastest ones that will understand the customers and provide solutions, right?
Ricardo, I'm curious, what do you find to be the hardest thing about that transformation? Is it more the culture? Is it more the legacy tech? Where do you see the most inertia?
That's a very good question. Everyone that makes that question to me thinks that to change the legacy, it's super impossible. It's like, oh my God, you have a mainframe with a current account system from the 70s. You're not gonna, you will never get rid of it, right? Which is sort of true. I can assure, I'm the CIO from Itaú Banco for the last 5 years. When I started, I also thought that I would never get rid of the legacy. I'd say, oh my God, this is so hard to change, because you just have thousands of engineers that are specialized in your platform, and all of a sudden you have to understand about microservices and public cloud, and you have to have a big migration program at the same time that you have to offer new products to the customer, right? But turns out we can do it. Turns out it's a hard problem to be solved, but we can solve it. And from our perspective, at least, we are in the journey to do it. And I think it's feasible. It's not easy at all, especially because of the scale. And you have to change a lot of businesses and mindsets to change your platform. We don't have a single platform, as you can imagine, right? Itaú has hundreds and hundreds of products, and you have to change all of them to keep the customer view, right? I mean, if you're a customer from Itaú, you're consuming lots of products, each one in different platforms, one in mainframes, other one in risk, another one is already in cloud or something. And you have to have everything in the same data lake to see the customer. And you have to have speed where you have to have speed. And some of the businesses are in legacy and so on. But again, to train a lot of engineers, to hire better people, to change sort of the knowledge of technology is not an easy journey, but it's feasible. And I think we've been through this journey for many years, and we are ahead of half of it, I would say. I have lost my some nights thinking that I would not be able to do it, but I think that right now, I'm way more optimistic in that sense. So to answer your question, I think culture is important, because we are part of a successful company that have been doing business in sort of the same way for decades, right? Of course, things changed, but not in the same pace that we are seeing the last 10 years, right? Things are changing much faster. So I think to change the culture and mindset, to operate differently, to operate thinking about that you are a digital platform, you are a tech platform, and you have to take care of it. That's your business. It's not someone that is just a supplier that will ask for something. It's a platform that you have to manage so it keeps healthy for you to remain competitive, for you to remain new products to the customer all the time. That mindset of managing a platform, it's the cultural change. I mean, there's lots of cultural change if you get into the details, but that's one main cultural change that we have to face in the business, not in technology. And that's I think it's a big challenge. We have to have lots of conversations, lots of, we like to say internally in the bank that every week we get senior people, the most senior people at the bank, and we invest a lot of time discussing. So what's the digital transformation all about, right? You have different point of views. There are people that think one way, people that think another way. So I think we're being able to find our path towards something that you described, which is let's be a tech company and offer better products to the customer as fast as we can. But it's not an easy way. Change the culture of a winning company, of a successful company. I think in my point of view, my personal point of view, maybe someone from Itaú will tell you something different, but from my personal point of view, it's the hardest move that we can do.
Yeah, I think one thing that's interesting on this point that I think we sort of learned as building Brex and building Pagar.me, I think we spent a lot of time interacting with traditional banks and sort of traditional financial service like infrastructure, right? And I think like one of the things that our engineers always sort of said was like, oh, like the system is so old, this like is so bad, right? And I think one of the things that I think we sort of learned is that like actually like when they were designed, these things were actually good.
Yes.
And there's a reason why they evolved into being the way they are now and the way they seem old. But most of the time, I think sort of the culture that created like financial institutions the way they were in the past, like they made sense. And I think sort of similarly to things like Intel in the 70s saying, hey, like people don't have to wear suits anymore, right? That's like a pretty like clear shift in like culture that like I think sort of propagated down without people really thinking about it. Or another one is like open offices, right? Like, is that really a productive thing or not? But it's just like something that people copy. And I think something that I think for us was very helpful as we sort of went through this process of learning more about banks and sort of like why they were the way they were is like, what were the constraints that like engineers like had when they were building these systems earlier on? And are these constraints still true? And sort of understanding why these decisions were made is like, at least for us, was like really helpful to understand, okay, here's like why people cannot do things similarly to what we're doing now. And I think it sort of creates an awareness of like why change is required and why the sort of previous model doesn't work, because most decisions, like most companies are well managed, right? I think most big banks were well managed, and these decisions made sense at some point in the past. And I think sort of understanding where the disruption is and sort of at the point that it starts not making sense anymore, I think goes a long way into sort of having shift.
That's a very good point, Pedro. I can share with you my thoughts on this. I think Itaú, if you know a little bit of Itaú has called itself the tech bank since the 90s, right? Itaú was like the first online banking that do wire transfers in the 80s in Brazil. We were one of the first ones to have ATMs in Brazil. We were the first online banking in the 90s, right? Itaú has always been a technology bank. I worked there since forever. So I know this story a little bit. But what I can assure you is that the good technology that make Itaú in the 90s, 80s, 90s, and on competitive was that we were very focused on business results. We were not focused on tech platform, right? And that was enough for us to be competitive in the 90s and in the 2000s. What's different right now from my point of view is that we have to have a platform view. We cannot live with monolith codes that we've built in the past because they were fine, because they provided the next financial product in a fast way, fast for the 90s, right? But now you have to make sure that you reuse your components. You got to make sure that you have a platform that will deploy the best hypothesis in 2 weeks, so you can sort of try out and see if the customer needs that hypothesis or something. And for that, the established platform doesn't work, just because it is, again, a big monolith. It was not thought for that. You have to change your architecture to be more competitive. So that's the difference that I see. But I'd like to shift gears here. We have 20 more minutes. That's something that I'm very curious about. And I'll ask David for this. Pedro, if you have a take on this, you can also jump in, which is, David, we have seen lots of investments in Brazil coming from venture capitalists in many different industries. That industry in Brazil was growing a lot for the last, at least since 2015. You worked for Sequoia. You know a lot about those investments, right? But with the crisis that we are seeing right now with COVID and so on, how do you see this industry shaping? So we had a lot of interesting fintechs in Brazil growing. Nubank, of course, it's one of the leading fintechs in Brazil, one of the leading financial companies in Brazil, if I may. And we're seeing lots of digital banks coming up as well, our competitors showing up in the market. But money is sort of drying out with the crisis, and we don't know how long this thing is going to take. The economy is really suffering from it. So how do you see all this crisis impacting our industry, especially with all the accelerated disruption that we were seeing? How do you see this landscape changing because of the crisis? I'm curious about.
You know, if you had asked me in March, and then in April, and then in May, and then in June, my answer would have probably changed every 3-4 weeks, because it's been a process of discovery, the entire crisis. Where I'm beginning to see is accelerating again, the level of interest, the level of investment.
Interesting.
There's still a fair amount of fear, I think, on Brazil. It is amazing how just negative the headlines are in international media about Brazil. Is very unfortunate. Yes. For the funds that know a little bit more and go through that, are able to actually go through through the news, they understand that there is a lot of opportunities. And the venture capital industry is this continuum pendulum that goes from fear to greed. And in February, it was greed, and everybody wanted to come in. COVID came, went all the way to fear. At least what we're starting to see is going back to greed. And the past 2 weeks, at least in funding in Silicon Valley, I don't think I've seen it a lot in Brazil, but at least in Silicon Valley, and I was talking to our partners at Sequoia last week, they're losing the most amount of deals in a very long time, because they're seeing the highest valuations they've ever seen in history at all stages, from seed rounds to A's to later stage. It's getting out of control. And what's interesting is that since they're only having meetings via VC, nobody can go into one of these VC's offices and sit down and see the logos in the table and since if you're a startup, you are just talking to a lot of investors that are in a computer. It almost like equalizes, it decreases barriers for any investor around the world to just invest in your company. And so suddenly it's almost like if you could have 15 computers, if you're a startup, obviously a good startup, and had talked to all of these investors that are flush with cash, right? Flush with liquidity. Interest rates are absurdly low. They're not going to go up anytime soon. Pension funds don't know how to return their money to their LPs, and they raised record funds last year. They got to go spend it. So that's a bit the trend that is starting. Okay. I think over the next few months, if the curve, the COVID curve and things start going, like if there's a second wave in the US or in Brazil, then the fear will come back again and people will put a little bit of the brakes. But ultimately, I think if you're a long-term investor and you're betting on these trends, it's almost uncorrelated with the macro.
Okay.
And we always said that we started in 2013 in Brazil, then the economy went into a complete crisis. That since Nubank started, Brazil's GDP has contracted like 10%. We never seen Brazil in the good times. Since we started, we've only seen Brazil in the bad times. And we've been able to grow a lot because regardless if the country's GDP goes up 3% or contracts negative 3%, more people will want to be treated better. Yes. And more people will want to pay less. Those truths don't go away, are uncorrelated with the GDP growth of the economy. And so if you understand that and you have a long-term view and you're betting on those trends, then you will just deploy that capital, you will invest for a very long run, and you will serve those very, very, very significant trends.
But you think that reasoning that you just described will keep on attracting investors, and as a result will keep attracting entrepreneurs to the fintech landscape in Brazil, right? So what you're saying is, in the long term, things will not change, probably, right? That's what you're saying.
That's
Okay.
true. Yeah, that's exactly right.
Okay. You see the same thing, Pedro, in the US, or something different?
So I think it's quite similar, right? I think like if you just look at public markets, I think there's a lot of like really interesting benchmarks there. I think like Square, for example, which is a big fintech here in the US, they're just like worth like $50 billion now. And that's like the all-time high during COVID, right? So I think the sort of greed versus fear thing that David said is really true. And I think sort of the overall trend that I think we sort of see here is somewhat similar, which is we all know that like if there's so much sort of liquidity and sort of government stimulus in the market, that like the companies that make it after COVID, like they're still going to be long-term successful businesses, right? And I think from an investor perspective, I think if you're sort of valuing a company and you sort of see a low interest rate environment, right? I think a lot of the returns in the future don't get that much discount as you sort of look at them today. So I think sort of the view is a lot more agnostic of macro than I would expect, and I think it sort of makes sense because we all know that like the companies that go after this, like they're still going to be around, right? And they're still going to be successful. But definitely, I think we sort of see a similar trend between greed and fear, especially in a lot of our customers at Brex that are getting funded and raising money and sort of going through that now. We see like funding continuing to happen normally, companies raising like rounds larger than before, like a little bit less companies being formed. But I think like companies that are established, like being able to raise like basically normally, which is obviously a very good signal, and especially fintechs.
I see. Pedro, I have a question about Brex. I was doing some research for this panel, and I was impressed with your company. If my data here is right, you're only 3 years old, and your valuation is around $3 billion already, and you have acquired 3 startups in this time frame. So it's an amazing fast pace for growing. Congratulations for that. So I'm curious about how is the future for you? How do you see Brex in this crazy growing pace? How it will keep it, and how you manage a company that is growing so fast in such a competitive landscape as yours?
Yeah, for sure. So I think a lot of the sort of fintech sort of success formula, I guess, that we've seen in the US was sort of similar to what David was mentioning, and is really a matter of like, are you treating customers better? Are they paying less? And are they getting something that they couldn't get from traditional banks before? And I think for Brex, it was really this matter of, we found this market that was basically, there was no one there, which was like building corporate cards for companies, right? And no one could get a card. You started a company, you went to a bank and they said no, even though you had like $1 million in the bank. And we were like, wait a minute, this doesn't make any sense, right? So we started sort of looking at this from a perspective of like, what is almost like common sense, right? Like what's like customers would expect from this, and sort of building around that. And I think we were very fortunate to find this market that was basically us, American Express, and a couple of banks. And really, I think the big advantage that we had is we were competing with banks on tech and distribution, and that's sort of how it started. And the fact that we focused a lot on this startup market that was very concentrated in the Bay Area, very concentrated, and there's a lot of a sense of community around it, made the growth possible, which for us was very good. And I think like sort of the path moving forward for us is really kind of continuing on that trend of like, how do we build the financial services, but not only that, but how to build that integrated with all the software side as well, right? Because as a company, like the challenge of managing a business is not just about getting access to a bank account or getting access to a credit card, right? Is how do you manage all the expenses that happen on the company, or how do you manage your cash flow, or how do you know, like, how do you manage your accounting and your books and all that stuff? And more like sort of the mindset and sort of vision that we have is sort of, how do we start building more the software side integrated into the financial services? Because that's what makes companies way more successful and able to better manage their finances. One of the things that we learned, I think, through this time is that like we went from like 50 employees in the beginning of last year to like 370 by end of last year. And as you sort of go through that growth phase, which for us was incredible and just a huge like learning journey. There's not a lot of playbooks, right? So not a lot of books were written about like how do you scale a company that fast, keeping people aligned in the same direction. And we were also distributed, right? We were across 4 offices in the U.S. So I think a lot of the sort of thing that we've done was hiring people that have seen similar growth stages before in our senior leadership team, and that sort of helped us a lot to avoid a lot of the common pitfalls. But obviously we made a ton of mistakes in the process, right? I think it wasn't as smooth as I guess it looks from the outside, but definitely I think a lot of like just sort of learning and figuring out things from first principles, because there was just not a lot of playbooks, and I'm sure David has seen a similar story at Nubank in Brazil.
Yeah, perfect. So David, from your perspective here, Nubank has grown a lot in the last few years, and I'm sure that it's not an easy task to keep the culture of the startup that you guys were in 2012, 2013. When you grow as fast as you were growing, or with the number of employees that you have right now, right? At some point, you just have a lot of people, and you cannot interview every single one of them, or if you can, you spend a lot of time and so on. So how you make sure that the culture, the mindset, the methodology, the technology that makes Nubank so successful will remain as Nubank becomes a big company, right? As you have to have alignment process or governance or whatever you're building to make your company structured as a big company.
Yeah, no, it's a gigantic challenge. But one of the things that I've learned, especially over the last 12 months, is that the question of how do you keep your culture as you grow is not the way to ask that question. It's wrongly phrased. Okay. If you're telling your people, how do you keep your culture as you grow? That means that your culture is perfect, because by definition, you're saying, I want to keep it as it is. The moment you want to keep something as it is the moment that you say, okay, good. I've reached the top. I've reached the best. And so the way to actually ask that question internally now is, how do we improve our culture as we grow? And when you ask the question that way, and when you think about improving culture, then it has a different answer depending on the stage of the growth. Some of the things that the company needs now, we didn't need it before. So to improve our culture now, given where we are, we need a set of experience and a set of processes and a set of methodologies that we didn't have before that we have to develop. Now, those don't necessarily mean you're losing the culture or you're becoming a big bureaucratic company. It just means that you need to evolve yourself. You need to be able to really understand what the company, right? It's very different when you are a 50-person startup doing one product out of Brazil. Very different when you have several offices in several countries and several products. The complexity grows exponentially. So I guess part is really understanding as a journey and seeing that you have to continuously need to reinvent yourself and understand what your culture needs. The other part of the question is are your values remain true? And the values don't need to change with scale. So number one value is this commitment to customers. We want customers to love us fanatically, to have that fanatism. That is true when we had 1,000 customers, as true as when we have 25 million. We are hungry and challenge the status quo. That's a different value that we have. We can maintain those values true as we grow. And so I think those things have to happen in parallel. You got to keep your values true, but your culture has to evolve, has to improve with your scale.
Yes, I agree. I agree with you 100%. The culture has to evolve, the values have to remain. But what I'm curious about, and that's what I was asking Pedro too, is as you grow, the way you build your products are based on a lot of people, right? I mean, I can imagine that you will need more robust process. When you have a small set of people organizing your company, producing whatever you are producing, it's easier for you to tell everyone, this is how we work, this is the way we build customer success, the way we build customer experience for them to be happy, right? But all of a sudden, you may find yourself with, I don't know, different priorities or challenges between different groups of engineers, or even something that you need someone to give an opinion and say, we're going to this way or to that way or something. What I'm trying to tell you is you're going to face new problems. With the scale, you're going to face problems that you didn't have in the beginning. So I'm just imagining here, and if it's not true, just let me know, but I'm imagining here that we'll need to come up with processes and new things and new governance to make sure that the as you said, the values will remain the same, right? To make sure that you deliver value as you were delivering before, right? Am I right?
Yeah, no, you're totally right. But I think you can do it in two ways. Part, yes, you need processes, and definitely, especially as a regulated entity, as a regulated banking license, you know this well, with the central bank, with regulations, you need processes. There is no way around it. So part, you just need to institute processes you didn't have before. There is no way around it. But partly, there is another. There are a number of different orders. We talk a lot about Netflix. Talks a lot about it very well, which is companies start with very high performers with a lot of autonomy. Then somebody makes a mistake, right? When somebody makes a mistake, then you go and you create processes so that that mistake doesn't happen again, which leaves lower performers, which are going to go make more mistakes, which means more processes, which means more high performers leaving. So a lot of companies end up getting in some cycles. Let's say, for example, your expense policy. That's an example that we've done. You have these 500 pages of expense policy. Our expense policy at Nubank is, you're an owner, do the right thing. It's a sentence, or expense policy. We fundamentally, we just trust our people. And those are the processes that can scale, but the processes around regulatory and bureaucracy, obviously that needs to be in place. There's no way around it.
Perfect.
Yeah, one of the things that we've done that I think, I mean, obviously I think we're at a different scale, but I think one of the things that we've seen at Brex is like that there's this, as sort of the company matures and you bring more senior leaders, I think there's this sort of trend of like treating every process the same and sort of applying a kind of a one size fits all mentality to sort of how we do things. And I think like different products at different stages of maturity, right? They require sort of different ways of thinking. So yes, I think if you have like your, like, I mean, our main product now has, I don't know, 2.5 years. Like the way we sort of make decisions on this product, there's a lot more process, there's a lot more sort of burden involved versus like a product that is like in a very embryonic state, like starting out with a team of like 3 or 5 people. And I think there's sort of this tendency as the company evolves for you to sort of run the company consistently across every sort of initiative. And I think one of the things that we've done was sort of having a pretty clear segregation between like what is like things that we absolutely cannot get wrong that we must get right? And what are things that we can build a lot more incrementally and we can actually afford to learn from mistakes iteratively and all that stuff. And I think for us it was really big because it enables us to sort of separate these two types of decisions and processes and sort of ways of thinking that enable us to move fast where it mattered and still be very, very diligent on the parts of the business that we had to be being a financial services company.
Nice, perfect. Nice insight, Pedro. Thank you. So, Margarese, I think I'll get back to you. It's 10 to the hour. Do we have questions that we should approach here from the public?
Hi. Yes. Well, first of all, thank you for the discussion, and I'm sorry that we sort of lost David. David, if you are hearing us somehow, please reconnect. Just hang up and oh, here he is.
It's only the image. I think he's hearing well.
Yeah, I'm here.
All good.
Sorry, connection hasn't been great, but I'm here.
All good. I thought we lost you for a little bit, Pedro, David. So great. So we have quite a few questions from the audience, Pedro and David. A few of them are interrelated. So I would like to start with Gabriel Rodrigues Siqueira. He asks, is banking as a service part of the strategy of your institutions? Pedro, you want to answer to that?
Sure.
I can start.
Go for it, David.
For us, we discussed about it. It's not. I think you have to make that decision. You cannot play everywhere. We are ultimately a consumer-focused company, and we want to focus 100% on the consumer and building that consumer interaction. So serving other providers just doesn't.
Sorry, David, I missed a little bit of your last few seconds.
So I was just saying that for us doesn't make a ton of sense. We made a decision to just focus on the customer and as a traditional B2C company, I focus on the consumer, and so will not be serving other companies that way.
Okay, how about you, Pedro?
So for us, I think there's sort of a similar view there. I think we are focusing on small businesses, right? And I think there's a lot there to sort of build, and I think we sort of decide to spend a lot more of our resources at this point focused on how to make it very easy to sort of sign up for Brex. So a lot of the sort of banking as a service mindset for us is how to make it really easy for like anyone to open an account through an API or through like an online dashboard or through mobile or through any sort of experience that way. But sort of offering white label banking as a service is not something in our roadmap now.
And two interrelated questions. Can you share some examples of tools you all use and you can recommend to optimize resources and reduce operation costs? And also quite a few questions here asking you for your advice for startups that are low in cash, low resources, how they can pass this phase and keep growing and succeed eventually. David.
Okay. So in terms of tools for keeping operating costs down, I don't think I have a great recommendation. We built a lot of our own tools at different levels of sophistication, from simple spreadsheets with alarms to to other tools that take information around software. So don't have a great recommendation there. In terms of how to pass through these few months or more months that are going to be hard where cash is constrained, I think the first thing is to, if you are seeing your business being challenged, and today at least the funding market in Brazil is harder, definitely, than it was 5 months ago. You're going to have to make the tough calls, the tough decisions around rationalizing expenses and perhaps reducing the size of your operation. It's a lot of startups have made very, very tough decisions over the past few months. Those were the decisions you had to make. And you know what's important is trying to get to a cost level or a size of operations that once we pass to the other side, and the other side will come, then you're able to restart your growth and potentially rehire some of the people that you had to depart with.
Pedro.
So I think one of the main things that a smaller company can do in sort of hard times is like being obsessed about very few things and doing them really well. So I think like there's this saying like constraints breeds resourcefulness, and I think it's really true because when you have sort of different constraints from either the macro environment or the funding environment, I think like you sort of have to focus on like what absolutely must go right. And I think it sort of forces a level of clarity about what you need to do that I think it can be a really positive thing, because without that sort of external constraint, a lot of the times startups can sort of get in this mindset of doing too many things. And I think just like finding what really matters and just focusing on one thing and doing it really well, I think can go a long way as you are resource constrained.
And Pedro, Juliano, Anita is asking if you are thinking about expanding to Brazil and acquiring other companies.
We are. That's international expansion still a little bit farther ahead in our roadmap, but definitely, I mean, being Brazilian, having built a company there, it's one of the markets that we're really excited to serve because businesses have been forgotten a little bit more in Brazil. I think Nubank and David are doing an exceptional job in the consumer side, but on the business side, I think there's a lot to sort of be built there. So definitely one of the first few markets that we're excited about, but still not something that we're actively pursuing.
Okay, so thank you to those sending questions. We have very many here. I can only hope that our guests will be back. So Ricardo, before I pass the ball to you again for your last questions, I have a quick question to both Dave and Pedro about your personal journey, right? Let's start with David. You were here in Silicon Valley at Sequoia and doing other work in investment banking. And then tell us about your journey into Brazil and what led you to found Nubank.
Yes, I was very lucky. I was working for, I'm originally from Colombia, and I was working for a US private equity fund, General Atlantic, that decided to open an office in Brazil. And when they did that, they looked inside and they looked for a Brazilian, and I happened to be the closest thing they had to a Brazilian in-house. They probably didn't know that we spoke different languages and that there were different countries. But I was super excited, and so I moved in 2008 to Sao Paulo to work with them. I worked with them for about 2 years in Sao Paulo. Loved Brazil, loved Sao Paulo. Had a great time. In 2010, I went back to the US for business school. But in 2012, when I finished business school, wanted to come back to Brazil, and when finally was ready to go on my own and start a business, decided to just stay in Brazil. The opportunity here was really phenomenal. I think Brazil, Brazil just a lot of the pains that a lot of people feel in Brazil on a day-to-day basis, ultimately they're just enormous opportunities. And so, and it's a large market, and there are a lot of talented people. There were beginning to be capital, so a lot of the ingredients to be able to start Nubank were sort of aligning around 2012, 2013, when finally decided to go for it and stay here.
Do you feel Brazilian nowadays?
No, to be completely frank, definitely not. I definitely have gone from Portuñol to Portuguese, so I can, yeah, I'm super comfortable. But still, I'm a foreigner in Brazil, which is fine. Brazilians are very friendly with foreigners. And now I have 3 Brazilian babies. So I have even stronger roots in Brazil, besides that other purple baby that just keeps growing and keeps me tied to this country.
Well, much health to your Brazilian babies. And Pedro, you did the reverse migration. So tell us about your journey from Brazil to here.
Yeah, so when we started our first company in Brazil, Enrique and I, we built this company called Pagar.me that was acquired by Stone in 2016, and it was like a fantastic journey and a great sort of learning opportunity for us, because we were 16 and we started that, and we raised like $300,000, which is all the money we could raise, right? Because who would fund 2 16-year-olds building a payment company in Brazil, right? And I think for us, just building a company in Brazil where like we sort of had a lot more pressure to be cash flow positive, a lot more pressure to sort of understand exactly what mattered, because people were a lot more skeptical in terms of like the products they want to use, and all that was really great, because later on when we decided to come to Silicon Valley originally for college, but then as we started our company, Brex, like after we a lot of these learnings from Brazil were really applicable, because we just sort of had a better intuition, I would say, about what was a good idea from a business standpoint, and just like what would customers actually like and want to use, because in Brazil, like that's the only thing that flies. And I think in Silicon Valley, because the market is a lot more mature, right? I think people are willing to sort of use a lot more vitamins versus painkillers, in terms of like the products they use and the software they buy, et cetera. And I think for us in Brazil, like you don't sell vitamins, you only sell painkillers. And I think sort of coming from that sort of root of being more resource constrained and having to sort of figure out like what is the Brazilian way of getting around these problems, and sort of approaching building a tech company from that mentality was really healthy for us. So definitely the best school we could have gotten in terms of like how to build a company in the US.
Great. Well, thank you. Ricardo, I'll pass the ball to you and for your last comments and last question.
Thank you, Margarese. Thank you for the invite. It was a pleasure to be back here in your conference once again. Hope to be back again in the coming years. I'll promise I'll make all the efforts to always join your conference. So we are on the hour already. I would like to thank David and Pedro for this great conversation. I think it's a very interesting topic, something that is very, to me at least, is very exciting to have this vibrant environment, and to make sure that by the end of the day, what everyone is trying to do is good for society. We're always trying to provide better services to the customer. The one who will benefit for all that we are seeing by the end of the day is the customer. We're definitely making a world better, society better, in the way that we are always providing better services. We're always eliminating things that are not good for people. So definitely those who will be the best will win, which is always good for everyone, good for the public, for society. So thank you guys. Thanks for the conversation. Thanks for being such a great competitors, because by the end of the day, that's what push us. That's what's make incumbents transform. So speaking for myself, it's very good to have people like you in the market, so we can improve, so we can better do our jobs, and hopefully remain competitive over time, and hope you guys also remain competitive over time, so we can always have a good time having these conversations and providing better services to the customer. Thank you.
A big thanks, Ricardo Guerra, Pedro Franceschi, David Velez. Congrats on your leadership and much success. Muito obrigada.
Thank you, Margarita. Thank you, Ricardo. Thank you, Pedro. It was a pleasure.
Right. Thank you. It was a pleasure.
Muito obrigada.
Obrigado.
Thank you. Obrigado.
And for those joining us for this second hour, this is the third event within BayBrazil's annual conference. We are expanding our annual conference this year and discussing various topics. Today, we are discussing the future of fintech. And now we are having 3 more guests joining us. We are going to discuss how technology is transforming the finance market in Brazil. And for that, we invited 3 leaders in this sector in Brazil. Guilherme Horn of BV Bank Leading Innovation is going to be presenting us the scenario and doing a recap of all the innovations and how this industry has been transforming as we speak. And also joining Guilherme for this discussion, we invited Benjamin Gleason. Hello, Benjamin, founder of GuiaBolso. Thank you for being with us. And Sergio Furio. Hello, Sergio.
Hi, Margarita.
Of Creditas. Good to have you back in our conference. And so, Guilherme, thank you so much for preparing this recap on the industry for us. And thanks for being here. It's with you.
Hi. Thank you, Margarita, for inviting me. It's a pleasure to be here in this edition, another edition of this great conference. You've been doing an amazing job during these 10 years connecting Brazilians and the Valley. So it's a pleasure to be here. So I'm gonna do a very quick recap on the evolution of fintech industry in Brazil since its beginning, and then we go to the most interesting part, which is the panel. So I'm gonna share my screen. I hope it works. It's always a very, okay. Can you see the screen?
Yes, we are seeing well.
Okay, so I have the privilege of being working in this industry since its beginning in 1998. So around 20 years of this industry, and a lot of things happened during this time. So the beginning of fintech in Brazil was in 1998 with the first broker dealers, the first digital broker dealers like Patagon from Miki Mauka, which is now a great investor at Credit Capital, NetTrade, another great innovative company in 1998. And 2 years after that, in 2000, I founded Agora together with some other partners. And the interesting thing here was that the assumptions of for creating for founding Agora was the first one, the small number of investors in the stock exchange in Brazil. So there were around 20,000 individuals investing in the stock exchange, which was around 0.1% of the market. The interest rate at that time, the scenario was that it would decrease. And the main customer's pain at that time was the lack of transparency in this market. And you see that we moved forward 20 years and we still have some assumptions valid. So the second point here in this journey was 2005. 2005, we assumed the leadership in the market. So if you take a look at the market share at that time, Agora had around 34 to 35% of the market, and the second player, which was Itaú, had 6% of the market, and the other banks were still smaller than that. So it was a very strong leadership, and that's why we were acquired by Bradesco in 2008. It was a huge acquisition for that time. And in 2009, after trying to retire, it took just about 3 months, and I realized that it would be impossible to retire. I founded a venture capital fund, which was the first VC fund for investing in fintech in Brazil. And the assumptions at the time were that the fragmentation of the industry would increase because of the digital world, and regulations would destroy the entry barriers of the sector, and we didn't have brands that were really beloved by users, and this would be very important. That's why I thought there was a very big opportunity for fintechs and for investing in fintechs at that time. It didn't work. It was too early for that. Very few entrepreneurs really thinking about innovative solutions. So I closed the fund, and 1 year later, I founded a new company called Automa. And again, the assumptions for Automa were around the size of the market for the independent managers, the interest rate, again, the economic scenario, and the penetration of this new generation that would be heavy users of the digital economy. During the next 10 years, a lot of fintechs were created. Around 500 or 600 fintechs in the country today. But if we go to the main scenario of the industry, of the banking industry in Brazil, we still see the same thing that we saw 20 years ago, which is a huge concentration of the market. A huge concentration. A few countries in the world still have this concentration. So what I'm saying here is that a lot of things happened in this market, and a lot of fintechs changed a lot of things in the country, but we still have a huge concentration. And a huge concentration means that we have a cap on the maturity of the market. We have a lot of people underbanked in the country, a lot of people with no access to financial services. But there is something that I think is going to change completely this scenario, which is regulation. So if we take a look on this 20 years, a lot of things also happened in regulation, and especially the central bank in Brazil have been fostering innovation and competition. And now we are just about to go into a new regulation, which is the open banking and also the fast payments called PIX, the new regulation on payments. These two new regulations, I think, are going to change completely the market. So I think for the first time, I really think that we are going to see something different in the following years, and we are going to see maybe a change in these assumptions of the concentration of the market that were valid for more than 20 years. So going into the most interesting part, as I said, let me just go back to the, okay. Let's move to the discussion with Sergio and Ben. And I would start asking them, when you started your companies, you probably have your own assumptions and the thesis for founding the company. Are they still valid today after all these years?
Ben, I can start if you want. and then you follow up on that. So the story between Ben and I is pretty funny, because we started the company probably in the same month back in 2012, and Ben and Thiago started by trying to steal one of my developers at that point. So pretty funny conversation. And then the developer told me, you know what, maybe you want to take coffee with this guy, because I'm trying to build something similar to what you are telling me. And so we met at that point. But addressing the question, and we were discussing about the thesis that was at that point. And I would say that it's still valid in general. The purpose, the underlying principles why we have built the businesses. I remember coming in my first trip to Brazil back in 2012. I had never been in Brazil before, and I moved like 3 months later. I was trying to push on the idea that Brazilian banks were not being very efficient because the cost divided by the volumes were very high. And then everyone was pointing me to a different dimension, that was that the cost compared to the income, to the revenues, were very low. And then therefore that they were like very productive. And I said, no way, man, I cannot believe that you are addressing this in these terms. This is like a myopia. And we said, okay, so the determination that we are taking, the purpose of the company is going to be disrupting that market, making sure that we can provide cheaper credit to the population, more affordable, something that can really change people's lives. And probably that's the only thing that has not changed in Creditas. We changed the name, we changed everyone that was in that first team, we changed the products, the go-to-market, the aggressiveness of the company, everything changed. But probably that purpose, that rationale underneath is the one that has really survived until today, yeah.
Great. What about you, Ben?
Sergio told part of the story. I think the other piece that we saw, we were coming, a little bit from the consulting world initially and had worked with some of the big banks. And so obviously we saw that, for the most part, things were pretty rosy on their side at the time. Although there had been a problem with credit as the kind of emerging middle class was getting access to credit cards and to auto loans. There had been, a lot of trouble there. And as we kind of dug deeper, we identified that ultimately, the problem was on the consumer side. And so I think that, by identifying that consumers were having a hard time understanding their finances, they were not able to get access in many cases to the right products or the quality products, and that they really ultimately didn't even have, the access to the data to get a handle on their finances. I think that has stayed common, kind of until now. It's still a big challenge. But I would say what changed for us along the way is that we realized, how important and how valuable the data was. So, getting access to the financial data, consolidating it in a single place and making it much more understandable for our users has kind of been the heart of the solution. And now, fast forward several years, everyone's talking about open banking, and now it's quite the topic. But I think at the time, we were basically pioneers in this. There were even questions around, was it feasible? Was it legal? What could you do with it? And we looked a lot at what was being done in other markets like the United States, where we saw that certainly there were companies like Mint and Credit Karma that had done quite well by kind of putting data back into the hands of consumers and doing it as a free service, and then being able to recommend better products on top of them than they were having access to. I think what's changed the most, and even to Sergio's point, like when you bring in new people to the team, you're like, yeah, think about it. There were like 5 banks, and they say, what do you mean? There's a new bank, there's whatever, and you're like, well, no. 2012 was very, very, very different. The term fintech didn't exist, and I think for consumers in some ways it was simpler because you kind of you open a bank account and you got all of your products from a single provider, but certainly it wasn't transparent. It wasn't necessarily competitive products. So I think today the complexity for consumers has increased quite a bit, but also of course there's much better products, much better experiences. So people who are able to navigate that end up being much better served than in times past.
Great. And Ben, we talked about the open banking regulation, and you did a great job to surpass all the challenges of opening the data. And now it's going to be something not just legal. It was never illegal. But now it's going to be something that all the banks, especially the largest banks, are going to be obligated to open the data. And how this regulation threats your business model or helps your business model?
Yeah, we look at it very positively. I think, if you look at it from the consumer perspective, it's something which is very positive, that we built the company around a lot of the same principles. And so it's something that we've supported from the very beginning. And now actually, GuiaBolso represents basically all of the fintechs in a working group with the central bank, discussing, how are you going to self-regulate the industry with some of the bigger players and the banks and everything else. So we're very much involved in that and bringing kind of the consumer benefit angle and the fact that the data belongs to the customer and should be used in their favor. And so I think, it's definitely a positive from that perspective. From our company perspective, also, we've been doing this for a long time now. We've seen that in our view, the challenge is actually much more around taking that raw, unstructured, bank transaction data and actually turning it into standardized information that you can understand, and then variables, and turning it into credit models and propensity models and segmentation models, and then using that to actually recommend products and see the performance of those products. So, if you're originating credit against these variables, you need to have, a certain amount of history. So in our view, kind of from a company perspective, we're many years in front, even once the data may be more generally available. And what we've seen, in the UK and in Europe, which is a little bit ahead on this, is that for most companies, once open banking actually does roll out, it's actually easier to just get the data from, a single provider and get the data in a much more, already kind of standardized and intelligent format, rather than building each API into every single bank. So that's why, the beginning of this year, we launched GuiaBolso Connect, actually our first customer being Banco Itaú. And so, I think we're also ahead on this front, and for companies that are interested in getting kind of a head start on this as well, offering this service so that they can also get access to this type of data, as customers are opting in, explicitly giving permission in order to get access to better financial products from, in many cases, companies or banks outside of the big traditional banks.
Yeah, great. And Sergio, in your point of view for your business, what is the impact of open banking regulation?
Yeah, so as Benjamin is saying, one thing is having the data. Another thing is knowing what to do with that data. And especially when you have like raw data coming from 5, 6, 7, 8 different institutions, I think that there's like a lot of effort that you need to do in order to standardize that data, create algorithms. And I think that from that sense, I'm also definitely like a few years ahead of everyone. Now, we work in collateralized lending. So we have secured transactions by the fact that we have, the house, the car, the payroll as a guarantee, and which in turn that diminishes the need for having like the cash flow of the customer. It definitely helps. And actually through our conversion funnel, some segments of the population we've required to have the account statements. So it's definitely going to be like a big booster of competition. It will allow us to be much more assertive when we want to figure out, and we typically talk a lot about credit risk, but we also need to think about account integration also from a marketing perspective, figuring out what to do with that customer. We're going to be 10 times better than before. We're going to see the financial life of that person, including both financial services and non-financial services. And some ideas can come to you when you see what's going on in that credit card, in that digital account, and so on. I think that there's going to be like a lot of movement, definitely in the credit approval rates, and also on increasing penetration and cross-selling of other products. We are true believers on this movement of intersecting financial services and non-financial products and providing like end-to-end solutions. And from that perspective, definitely there's going to be like a big boost of opportunities on that. Yeah. In unsecured lending, though, I think it's definitely going to be the best winner, right? So unsecured lending, you see like a lot of difficulty in figuring out whether that's like actually a good customer or not. With the access to that data, if the customer provides you with the credentials to actually make those integrations, then essentially the competitive advantage of the big bank diminishes very rapidly.
Yeah, I agree with you. I agree. Ben, during the crisis, the COVID, we know that the user behavior changed a lot. And everybody talks about the food delivery, the use of e-commerce, these obvious things that we all know that changed a lot. But in your perspective, as you have a lot of data about these users, do you see another significant change in the behavior?
Yeah, definitely. So, just think about people's finances, right? You set up your kind of lifestyle based on a certain assumption, which is, I have a salary or an income of X, and therefore I can, hopefully spend X minus something. The more, the better. And what we saw is that, as the pandemic hit, people's incomes were severely reduced, and so we were able to actually see also how salaried workers were impacted. Kind of the autonomous informal workers and small business owners were impacted. And just from April to May, incomes dropped for more than half of the people. And so there was quite an impact from that perspective. That prompted a lot of people to look for credit in the market. So the average loan size kind of across the market, so not only looking at the GuiaBolso loan data, but what the banks are lending, what other fintechs are lending. The average loan size increased. So theoretically, people asking for more money, even as their incomes were going down, but the approval rates decreased. And so people are having a harder time getting access to that credit. And I think generally, as people have adapted kind of their lifestyle and their expenditures, obviously, you do see that a lot of expenses, either because you don't leave the house anymore, so you're not doing that anymore, people have kind of pulled back. There's actually been an increase in the amount that people are having savings accounts, which is kind of ironic. So if you compare January to the month of May, there was about a 50% increase in how much people are keeping in savings accounts. So hopefully a good sign in the sense that people are actually saving more. Maybe not such a good sign in terms of where they're choosing to put their money. But obviously there's been a lot of volatility. So I think people are also just kind of very risk averse at this point. But the interesting thing is to be able to see that kind of across, individual users, of course, anonymized, but not just across a whole swath. We have X number of customers and the income went down by 20%, but actually saying, this kind of, dentist went back to work now because he's starting to get income. This, doctor never stopped working, and this other, professional stopped and hasn't gone back at all. And that allows you to adapt kind of what, you're able to recommend that they do and the products that you're able to offer them.
Yeah, this is interesting, and maybe we are going to see a change also in the way the Brazilians look at credit. I know, Sergio, that you lived in the United States, and there is a big difference between the way Americans look at credits and loans and Brazilians. For Brazilians, credit is the last option. And it's something that many times people gets ashamed of taking credit in the bank. How do you see that? Do you see that this is changing in the country?
Well, I would say that there are like two Brazils, right? There are multiple Brazils, but we tend to think about Brazil as Faria Lima. And definitely there's many more Brazilians than in Faria Lima. And so there's like a huge chunk of the population that loves credit, even if it's a really bad quality of credit. That's the reality. So we like to say that Brazilians have easy access to the worst financial products on earth. And that's like, it had like two sides, right? It's good that they do have options of actually getting loans, as opposed to Mexico, where lending penetration is so low because nobody wants to approve a loan for anyone. But definitely, like, I think the point here is, how can you improve the financial product to make it more attractive, more appealing? What you said psychologically, in definitely like in multiple segments of the population, is totally right. So lending is seen, and borrowing money is seen as like a negative stamp. It looks like a loan is to cover a hole, while a loan can be your platform for growth in reality, right? And I think that the US is mostly about that, even more than Europe, right? The borrowing rates that we have in the US are astonishing. And I think that Brazil has the potential of having that thing. I think that we have so many things to do in Brazil. GDP per capita is so low still today that you need so many entrepreneurs to actually create businesses. I'm not talking about like the skyrocketing entrepreneur that gets like millions in funding. I'm talking about the baker that this is like the perfect example of our customer. It's a baker. He has been owning that property for like 6 years or 7. He's doing well, but he has a dream of growing the company and he wants to establish a second bakery, and he doesn't know how to do it. And then he suddenly gets a loan from us and then build like the second bakery, and then he sees the cash flows of the first bakery paying for the second one, and then it's just repeat and again. And that is amazing, because that has always been in the mentality of the American guy, and not in the Brazilian. Brazilian is like a land of entrepreneurs, but the ones that actually they think that there's a ceiling to the growth, and tapping the potential of that people is something that we have put as a mission for ourselves. Is how can we make sure that everyone do their best in their lives, and that we can provide a type of platform that make them grow. To be honest, I haven't seen it yet. So this is still in the platform that dreams, and lending is still like a last resource animal for most of the population. We do today 35% of our lending goes to small business owners, professionals, freelancers, and most of the time they're using for capex. They're using it for growth, to expand the business, and that's very confronting. Very comforting. It's sort of like you're using the money actually to create more money instead of just to fixing holes. I second what Benjamin was talking about before. We had like this thesis and actually proved to be like very right. So we split our customers between fixed revenue generation and variable revenue generation. So this the CLT, the employee versus the entrepreneur, and it's amazing. It's employees are prepaying the loans faster than ever, and the reason is because they are staying at home. So in most cases, they have not seen a reduction in their salaries. They're keeping the same fixed salary, and they are spending less. So they are reusing that money to prepay those loans. And as opposed to that, you have like the other side of the spectrum, give me as much money as possible. So conversion rates on that side of the business skyrocketed. And then suddenly you have like plenty of ways for growth with that other segment that obviously is much more volatile, right? So hopefully with the reduction in rates that we are doing and that the market is seeing with treasuries now at 2%, 2.25%, consumer rates are going to go down. We just need to make sure that we deliver amazing products for the Brazilian population, and then we will see how the good side of credit is ultimately going to emerge.
Yeah, great. So the COVID crisis has been good for you, right?
I think it's I think that there's definitely for us has been amazing, because especially because we as a privately funded company, you always get like those questions by investors: what would happen if? And they come up with, if the world collapses, if unemployment rate goes up, if suddenly this capital markets dry. Okay, everything has happened in just 2 months. And now you can see that you are now writing the story in the book. And this is I think this is very good as an entrepreneur, because you are not going to be trying to sell something. You're going to be just showing the result of your work. You're going to be showing the result of your business model. So what we did in our case was slowing down the growth, just looking at what was happening, and the result has been amazing. So I think it for Creditas, it was good. But I would say that essentially more as an ecosystem, technology is the big winner of this, right? So now, those segments of the population that didn't think that they had to rely on technology to do X and Y, and they say, no, I prefer just to go to the shop, and technology is not for me. That is over. And the point of technology is that once you try it, you demystify the technology. You see that it's simple, it's easy. Those guys are not going to go back to the usual way of behaving. So I think that technology is a big winner on this.
Yeah, great. Ben, you have a lot of knowledge about the behavior of users and a lot of knowledge about all the fintech landscape, especially in B2C. How do you see the evolution since the beginning of GuiaBolso until now? How do you see the evolution of this landscape?
Yeah, this has been something that we've been able to kind of see from the inside, as you said. So when we started in kind of early days, we had basically the 5 big banks connected to our platform, so users could connect those bank accounts, pull in all of their data, consolidate it in one place. And ironically enough, in the beginning, it was so consolidated that on average, people had about 1.1 bank accounts. So essentially, unlike the US kind of Mint use case where people would have 6 different accounts that they were putting in one place, they were actually only in many cases connecting one bank account with GuiaBolso. And people said, well, is that even then a use case? And we got like 50,000 new users in the first 2 weeks after we launched. So we said apparently yes, because there's nothing like it at all. But what was interesting is that we even doing something extremely simple in the beginning, like showing also the credit card expenditures in the same place with the same dates, rather than having to go 8 clicks in to see your credit card statement, and showing the actual balance rather than saying your available balance, which included the cheque especial, which actually we're very proud that I think that was made illegal now to show it that way, in part because of pressure that we were bringing and putting forth the transparency. But the change has basically been, it started kind of more there about how do I just understand what's going on within my own bank account, within the credit cards I have for my bank and the investments I have for my bank. And now you actually do see that there's about, within our user base, about 1.4 accounts, bank accounts per user on average, and about 2.3, 2.4 credit cards. And so increasingly people are splitting the relationship across multiple banks. And one of the interesting things is that, once somebody already has an account at a big bank, they may open an account also with one of the fintech banks, but they usually, in the cases that we see in terms of share of wallet, are not actually shifting most of their kind of financial activity to the fintech startup. And so, although there are a lot of options, they're choosing, okay, I only want this one credit card here, or I only want this one investment here. The rest of my relationship I'll keep in the traditional banks. And so I think there's been a huge evolution, and fintechs have definitely come and definitely increased the competitiveness of the market and given better user choice, but it's still very niche. There's very few players that are actually yet able to completely substitute the big incumbents, and so you do see kind of a fragmentation, which makes it more difficult for consumers. But I think as this continues to evolve and the kind of the better experiences will become more and more digital, and so consumers will get more comfortable with that. They will get kind of the mindset of, hey, I can actually survive without potentially having an account in one of the big banks. And so I think you will see a little bit of that migration, but just the one thing that I think just how GuiaBolso thinks about it and how we position ourselves is, I think it's very hard to imagine a single bank or a single fintech having the best products across multiple customer segments, across multiple needs, so investments and credit, et cetera. So we look at it as more of, how can you work with the best providers of all the different products in the market and do more of a curation and help the individual user get the best product from the best provider at the right time, and really use our data in order to, there might be a company with the best credit card in the world, but if they give you a 200 reais limit, that's not actually a very good credit card if you have a 10,000 reais income. So the best product is relative to the individual situation of the customer, and seeing what they're using now helps to recommend the right product for what they should be using next.
Do you think, is it something sustainable to have all this fragmentation in the user experience, like having the credit card at Nubank, the investment account at XP, and the banking account at another one, and so on? Do you think this is something really sustainable for the user?
I think it does add a lot to the complexity. So this kind of unbundling definitely makes it hard. You are seeing kind of this rebundling in many other markets. So whether it's a third party kind of rebundling and similar to like a Mint or Credit Karma, GuiaBolso case, or companies then trying to build out additional products so that they can give the kind of one-stop shop experience. I think that's going to become more and more common. And so as products are being more commoditized, for example, on the investment side, right there, with rates coming down, if you're looking for just a simple fixed income product, you can get the same product from 10 different brokerages. So at that point, it's more, you probably care more about, if I can get 5 good services from this one company and simplify my life a little bit, it's probably worthwhile, even if it's 0.01%, less yield on a certain product. And so I think that will continue to happen. But the other challenge is, how long will fintechs be able to kind of subsidize the products that they're offering? I think it's a great time to be consumers nowadays. But how long can that keep up before a lot of the fintechs that have these really great products will have to think more about the lifetime value and the unit economics?
Yeah, so just adding, Guillermo, just adding on Ben's comment, right? So I think that definitely complexity increases, but in the future, open banking is going to be helping you in integrating all that mess of different things. And especially when you get into not only account integration, but also transactionality. So starting a transaction in Itaú, even if you are in Creditas today, I think that would definitely be like a booster in the customer experience. Now, the second price is about pricing, right? So remember that a bank that today has 8 different products with one customer has an amazing price advantage because they can bundle all of them and then create like a competitive package. So it's going to be difficult to steal the credit card from that customer, because if you steal the credit card from that customer, maybe the loan that they have with that bank, then it may suffer. You may have like a higher rate for that, right? So I think that bundling, there's like some interesting things that you can play with. Now, another angle would also be, you're thinking about banking as a relationship and a set of products, the account, the credit card, the loan, and so on. But I'm thinking more and more about customer solutions. And the customer is not looking for a banking solution. They're looking for a solution for their car, for their house, for how they pay, right? And I can see that you can have a customer where you are having the car financing and then replacing the car every 4 years, and that works pretty well. You don't need that to be integrated with your checking account, the reality. You just need like a good direct debit, and then having like an amazing platform in which you can replace that car every 2-3 years. And that's much more powerful than merging a financing of a car with a checking account, that in reality, you don't need them to be that much assembled.
Yeah, this is very interesting. And I'd like to hear what you think, Sergio. Something that I really believe, that it's going to be very difficult for the banks to compete, especially with the credit fintechs, because I think credit specifically is very much specialized. The knowledge that you have on your business, it's very difficult to a big bank to have the same knowledge and specialization and so on. So that's why at BV we are partnering with a lot of fintechs, because we really believe that the winners are going to be the specialists in each niche. What do you think on that?
So on one side, yes, the big bank, they cannot get into the granularity that you get when you make a partnership. I think that you guys have like a partnership in solar energy to do solar financing, which makes like total sense. Underwriting a solar panel is totally different than a personal loan or a house or a car and so on. You guys at BV, you're specialists in cars, but can you be a specialist in houses as well, and in personal loans and in blah, 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 and so on? It's extremely tough. So from that angle, I agree with you. You have like the other angle though, which is customer acquisition for the bank is much easier. They already have like a platform of customers. They have like a 20 million customers, 30 million customers with the accounts embedded there. They can cross-sell a personal loan much easier than a fintech that actually needs to make an investment to acquire the customer. And then the other angle is also, there are like multiple types of funding of fintechs, but if you don't have like an easy access to resilient capital, so funding, the bank may also win the game, right? Because they have access to 0% deposits, which are the checking accounts. It's true though that with Selic, with treasuries at 2%, the competitive advantage diminishes, right? So now it's not that cool to be a bank. I remember when I came down here, maybe like, what was that, in 2014, 2 years later after coming, I remember Dilma lowering the prices to 6.5% of treasuries, and then inflation popped up, and then we went all the way up to 14%. Jesus Christ! At that point, you definitely wanted to have a banking license, because then you get access to 0% deposit. There's like a 14% gap. Now at 2%, it's much less difficult to compete. But the resilience and the stickiness of the checking account, I think it's amazing. It's very valuable. And I think that from my perspective, I think that fintechs in the long run, they actually need to create their own pool of funding sources, diversify, including retail deposits, and eventually getting a banking license, because you want the best of both worlds. At the end of the day, if you want to be like the long-term player in something, you need to be amazing in culture. You need to be amazing in treating your people so that you innovate constantly. You are humble and you're agile and all that stuff. But you also want to have 0% financing costs, because that's an ultimate competitive advantage. So I would say it's not one or the other. It's both. You need to do both things extremely well.
I would agree, just to chime in on that. We went about that a little bit different direction, but we came to the same kind of conclusion, which is in a sense, it's going to be very hard to have a cost of capital as a fintech, which is competitive with the cost of capital of a bank. There's also, depending on the type of fintech, we're a very tech, heavy fintech. So banks in many cases will have more scale around operations, for example, but many banks do not have the kind of data and the data processing and the ability to really do the kind of machine learning models that are able to create risk-based pricing and create the really good digital user experience. And so that actually led us to partner with banks like BV and others, where in a sense, you're taking the best of both worlds and combining it in a single place. And so kind of, everything which is digital and which is data and the user experience to get the loan, for example, tends to sit with us. And then the kind of, the capital and the operations afterward are with the bank. And so we saw that that's where kind of, combining the two models, you have the most margin to be had, and you can offer products which actually are very, very competitive with the big banks. So when we compare kind of the rates our users are getting at the big banks versus the rates that we're able to offer, in about 70% of cases, we're actually able to offer a better rate because we're doing individual risk-based pricing based on this kind of hybrid model. And we think that's very powerful. And, with the COVID crisis now and the capital markets basically drying up for a time, we found that our model was much more resilient actually, because, the banks didn't completely pull back in terms of their credit appetites. They were able to continue lending kind of through the shock and through the crisis. So we were able to have capital and have even launched B2B solutions now to help other, lending fintechs to be able to offer personal loans on their site using some of the relationships that we have with our banking partners.
Great. I have a lot of questions, and we just have 15 minutes. So I'm going to move to another subject, which is about the challenges on growing and scaling the company. So you are both successful entrepreneurs. Your companies grew a lot. And we recently saw the case of Wirecard in Europe, which caused the attention to something which is the focus that the entrepreneur generally have on growing the business, just growing the business. And sometimes he gives not the same attention to the governance and some other issues like that. So how do you manage the growth of the company and the governance and structure and all the other things that are not so sexy in the day by day?
I can start. So I'm not sure that governance is going to solve a fraud problem. And we are in Brazil, right? So fraud is all around, and there are like multiple rules to avoid fraud, but fraud is fraud. And Wirecard is not about entrepreneurship; it's about probably stealing, right, or cheating, and that's like a different set of problem. So that's about values, core values, and what's important for you as an entrepreneur, and what you stand for. And more than you is you and your people, and your people is not the board. The board, even if it's amazing, they will not know what is under the carpet. You need to have your people around you, and you need to make sure that everyone lives the same values that you live with. And so the Wirecard scandal happened now, but it's the same as Enron back, 10 years ago. Nobody was talking about like the governance of Enron, and that's a typical issue that every once in a life it comes. once in a time, once in a while, it comes back, and we speak governance, and I'm not a fan of that. Scaling a business is very tough, as you mentioned, right? And there's like a lot of pressure on the entrepreneur, and on results, and in growth, and in showing numbers, and showing magic, and then everyone opens the mouth and they go, how is it that they make it? And I see that it's a pity that some entrepreneurs go with the shortcuts, cut corners, and then try to do it with a very different angle. I think that it's not an example of entrepreneurship, and we need to be very aware that could be happening in companies in the ecosystem, and that things can actually kill an ecosystem. I think that now Germany, you don't see them in the same way, and this is like the type of thing that we need to prevent very much in Brazil from happening, and being very close to that, and creating those core values in our organizations. Yes, we want to grow. Yes, we want to cause an impact, but we want to do it right.
Yeah, and I think it goes back to the objective. So as Sergio said, not everyone sets out to build a durable, sustainable company. Maybe they're looking for a quick buck, or they're motivated by other things. But I think that's why when we kind of set out and thought about what we wanted to do, even in terms of our mission, right? So when we say we want to improve the financial lives of millions of Brazilians and transform the financial system in Brazil. Obviously, to transform the financial system, this is a long-term goal. It requires a sustainable company, and so I think it changes just the way that you go about things. And briefly, I was running Groupon down here. Groupon was like the fastest growing company ever in the world, and IPO'd very quickly, made a lot of money for some of the early investors and founder and everything, but ultimately was kind of a flash in the pan because it grew so fast, and there's nothing else that was kind of that they stressed and that they worried so much about. And so I think that definitely marked me. And so from the very beginning, we've thought a lot about how do you balance this. And so even now with kind of what's been going on in the world, where investors were only saying grow, now they're like, oh, wait a minute, there's something called unit economics and cash flow. I think we kind of had a sense of that sooner, and so it wasn't like, oh, we have to change our business model or our thinking now that people are caring about cash flow or unit economics. It was always something that we thought a lot about and try to build the business around. And so ultimately it's what's your objective, and of course hiring people that hopefully share your values, if you have the right set of values.
Yeah, this is really hard, especially when you need people, and you have to hire very, very fast, and it's sometimes tough to take this decision of not hiring someone because he's not totally aligned with your values, and stopping the project. I know it's not easy. Well, we have some questions also from the audience, specifically one concerning the entry of the big techs in finance space. The question from my friend Carlos Lino. Hi, Lino. What are your takes on the WhatsApp movement into payments? But I'd like to also extend not just WhatsApp and Facebook, but all the plays of the big techs in finance.
Yeah, so I remember like discussing about this in a panel with the bank executives like a couple of years ago. They were like so focused and concerned about fintech, and I was telling them, hey, dude, we fintechs, we don't have capital and we don't have customers. We suck about this. It's going to take us forever to actually make a dent into your market. Now, the big techs, that's a different story. They have cash and they have customers. And even more importantly, customers love them. Customers love to go into Amazon, go into Facebook, WhatsApp, Apple, all it's love, it's pure love. And at the end of the day, that's what drives businesses. And so you look at the movements of, and take the Latin American example. So Mercado Libre, yes, it started as an e-commerce, but then they said, okay, you know what? The payment process, it has like we need to crack the code on how to do this better. And then they do Mercado Pago. And once you pay through Mercado Pago, they say, okay, well, but the financing is not properly done by the market. So let's build Mercado Crédito. And I think that that's fascinating, because then you provide a complete solution to the customer. WhatsApp it was like a no-brainer. I don't understand how is it that they didn't try to do it like earlier. Actually, they did. I thought that solution actually was dead, because the industry has been talking about that for the last year. The integration through Cielo and the likes in WhatsApp, and ultimately, I think that the central bank said, "Hey, dude, I mean, we already have a solution for this, which is called Pix, and you just wait 6 months, and then you will have that." But it's like a point of no return. So big techs are going to be big players in financial services. Financial services is going to get commoditized more and more. And if we don't figure out a way of how can we get out from pure financial services into something else, like a more full-fledged end-to-end solution, or we partner with those big techs, if none of the two happen, then I'm very negative on financial services. And I think that, you know, the problem for the big banks is not in fintech, it's on those players that may tend to cannibalize ourselves, and we need to reinvent us, and we need to figure out what can we offer to the customer, how can we improve the life of the customer, not only the financial life.
The only thing that I would add is, you know, I think there's always a question of how much are they willing to be regulated. That's kind of the big banks. They always cite that as like, oh, hopefully they don't want to be regulated, and that's going to save me. You know, but you know, you saw WhatsApp come in. They got, you know, shut down pretty quickly, and so they're seeing it's not as easy as maybe they thought it was. And I think, you know, different tech companies are going to have different, you know, levels of success. I think Amazon, for example, is able to build kind of this ecosystem where it makes a lot of sense to be in the Amazon ecosystem, because if you get one Prime membership, you suddenly get tons of services. And Amazon's kind of built this trust and this kind of no questions asked. The customer's always right. I wonder if Facebook is going to have the same credibility or retain that same credibility, you know, where consumers might want to have all of their data there, have these manipulated kind of, you know, political ads being thrown at them, and move their money there. Maybe there's a point at which they say, maybe for this company, it's a little bit too much, and I prefer not to be there. So I think the experiences will be different, and, you know, how much do you want to share with these, you know, big media companies will be a question around the privacy and everything else. But, you know, certainly they have access to a lot of massive customer base. So if they take it seriously, they're going to be serious competitors.
So the last question, if we move forward, let's say 10 years, how do you see the financial market? How do you see the relation between banks and fintechs? Are we going to be still talking about banks and fintechs, or is it going to be just one thing? How do you see that?
Yeah, so I think that the pure fintech play and the pure banking play, I think that is going to disappear. They're going to merge into something which is going to be a regulated entity. There's no way of escaping, which essentially means that fintechs, as we see them today, are going to disappear, and they're going to become banks. But that's just a form. That's like a formal aspect of it. It's like a regulation. And by the way, there are like multiple types of fintech. I'm oversimplifying here. I'm talking here about like the challenger fintechs, as opposed to the fintechs that act as you know, software platforms to be combined with financial services providers. But I think that there's going to be like a merging process and migrating into a fully regulated entities. And then therefore the distinction is going to be more about, you know, the banks that will adapt themselves, or fintech companies that will adapt themselves to create more value to the customer beyond what the customer knows today. I see like this sometimes banks oversimplifying and then saying, yeah, well, you know what, Nubank is just an app. They don't say that anymore, I think. And the point is that these companies are much more than what you see. It's what you feel inside. It's like it's a heart that really goes at a different speed and feels different things. And that's very powerful, because that gives you the ability of reinvent yourself every single quarter if you want. And who said that I cannot be doing non-financial services? And I do think that 10 years down the road, banks will need to look like, and fintech companies will need to look like much more like Mercado Libre, doing both things at the same time, than just staying at your silo and saying, okay, you know what? Now, 10 years down the road, I managed to do a wire transfer with just one click. Okay, that's not the disruption that is going to happen. Oh, yeah, well, look, I'm going to be doing a payment just with a look in the eye, and that's it. Yeah, well, that really doesn't solve problems in the humanity. And I think that there are like things that are much more interesting to do. How can we provide affordability in housing? How can we rebuild the way that people actually moves around? You know, so many things that are very cool and that we can contribute with a financial angle, obviously, but escaping this trap of I need to reduce the number of buttons that I push and I need to improve my screen. It's short-lived. You will need to do much more than that in the future to remain competitive.
Great.
I think we do see that people are talking about it a lot. We'll see how much it actually happens, but you know, these kind of different waves of consumer fintech, right? And kind of the next wave of consumer fintech, people are speculating is that, you know, at the core of it, people actually don't like to deal with their finances that much, right? You don't like to have to sit down with a spreadsheet. You don't want to have to worry about how much is in your checking account and transfer it over here and then pay your credit card bill. That's a huge hassle in a sense of, you know, friction and really, you know, frustration for a lot of people. So, you know, the more you can automate that, I think people will be, if you can have a very kind of, you know, trustworthy brand and a very credible, you know, system with very good products and good experiences, people do want to have a company help them automate that stuff. So I think more and more you'll see a move also towards just take care of it for me. Look, I'll give you some parameters about what I want you to do. And then I want, you know, maybe a fintech company, a technology company, a bank or whoever just to go and take care of it. And the last thing I say on that is just, you know, as long as you have big companies with executives thinking about their quarterly bonus and there's venture capital money out there, you're always going to have entrepreneurs and some form of fintech attacking problems that consumers are feeling and doing it with an owner mindset better than a lot of executives. So I think it's going to be a constant cycle there.
Agree. Great. So Ben and Sergio, thank you very much for your participation. Margarita, thank you again for the invitation. It was a pleasure to be here. It's up to you now.
Thank you so much, Guilherme. I do want to ask you one last question, if Sergio and Benjamin can answer very quickly, but I think it's a very interesting question from Travis Foxhall. Over time, debit cards and digital accounts have become increasingly commoditized. Do you think the same phenomenon will happen with credit cards? If so, what is the next killer product to hook?
Yeah, I can start with that. So I think I'm going to be very clear with this. Checking account, credit cards, time deposits, personal loans, mortgages, auto financing, all those things are going to be commoditized. All those things. Software actually works. It's amazing, but it works. And in just a year, I just look at the progress that we have made as a technology company. It's absurd, and this is just exponential. So I'm pretty sure that 5 years down the road, all that just by itself is going to be commoditized. So that's what I was mentioning before. We need to be so alert and so looking into what else can I do to the customer. Ben was mentioning about like something that how can I automate the financial life of a person? It's very powerful. I go even beyond. How can I automate the life of a person? The life that is non-essential. Just like focus on your family, on having fun. But having to think, I'm planning on buying like a new car a year from now. Okay, I should be like studying and doing my research. If I want to optimize that, someone should be like taking care of me. It's like my concierge, right? So I think that the next killer project is not going to be one of these. They are short-lived. You definitely need to have an amazing checking account. You definitely need to have an amazing credit card, and so on, so on, so on. But it's much more than that. And I think that if you are an entrepreneur, that you base your success on what's going to be the next product, you're confusing a couple of things. It's you build a company to generate value 30 years down the road. That's the reality. We generate value decades from now. So we need to create mindsets, cultures, and that's what will take care of us in the future, hopefully.
Benjamin, any comments on that?
I have a similar opinion. You know, I think the customer acquisition costs for fintechs are so high, and if you have a single product that's becoming increasingly commoditized, it's tough. But that said, I do think there's still a lot of room in Brazil for, you know, at least for the next 5 years, to have a lot of companies coming in with different products. So you see in the US, you can get, you know, a type of credit card which has cash back or gives you, you know, true benefits for travel and things like that. I think, you know, on average, the credit cards here in the market are terrible in terms of, you know, the cost benefit. So I think there's a lot of room to, you know, for different segments to offer much better products for a long time. So in the meantime, we'll continue building trying to automate and solve all the problems automatically in people's lives. But you know, until then, I think there's tons of space for a lot more, you know, entrepreneurs and people coming into the market still. But don't look at, you know, the market leader, the leading fintech and try to copy them, right? That's not going to be a very effective strategy. So you do have to think about, you know, what's your edge, what's your hook, and how do you build a moat around that.
And Guilherme, any comments on that?
Yeah, sure. I think that the most important thing is to ask the right question, and I think this is not the right question. The right question is, like Sergio said, is it's all about the mindset. So we generally tend to think about the solution that we have today and what's going to replace this solution. But it's not about that. It's about the problem. So what is the problem and what's going to be the problem in the following years? So let's think on how to solve the problem and not how to increase or the solution that we have today. So it's all about mindset. I agree, totally agree.
Well, thank you for sharing your thoughts and your journeys. Congratulations, Benjamin and Sergio, on your companies and your success. And thanks for leaving your mark in Brazil, and keep on doing that. And Benjamin, welcome to our conference for the first time. It was great to have you. And Guilherme and Sergio, wonderful to have you back. Muito obrigada.
Thank you.
Muito obrigada.
Obrigado. Bye-bye.
And thank you everybody that joined us both at Zoom and on Facebook. The recording of this session will be available soon. We'll let you know both by email and through our social media channels. Our conference online continues next week with a panel moderated by our board member, Daniela Jorge, about the role of design in tech innovation. We are gathering designers from major companies in Brazil and the US. And you don't want to miss that. I'll see you next week. Muito obrigada. Tchau, Guilherme, Sérgio and Benjamin. Obrigada.
Tchau.